Assuming this deal with Universal Music Group goes through, Pershing Square Tontine Holdings has one of, if not the greatest risk-reward profiles in investing today. Hey everybody, Walrus here from Walrus Street, bringing you an explanatory video today on Pershing Square Tontine Holdings merger with Universal Music Group. Just a reminder, I am not a financial professional. All information in this video is for entertainment purposes only. I wasn't holding any Pershing Square Tontine Holdings shares before this deal was announced on June 4th, 2021. But when I was reading the details of the deal on the 4th while simultaneously watching the share price tank 12% on my second monitor, I was dumbfounded. I was stupefied as to why people were closing out their position, and I took that opportunity to open one of my own. Now, full disclosure, and before I proceed, I need to let you guys know I am, as of the recording of this video, holding 324 shares of PSTH, and I plan to keep adding to that position anytime the share price drops below $23 a share until the deal is done and the ink is dry. Outside the risk of the deal falling through, I seriously can't fathom why people were closing out their position, other than maybe this deal is complicated and they didn't understand it. Most SPACs are shell companies that collect money from hopeful investors, merge with a target company, and then the investors get a one-to-one transfer of shares from the original shell to the merged company. That's like kindergarten level math. 1 equals 1. This deal is more like pre-calc, and since most of you were probably asleep through pre-calc, I'll speak slowly and break it down so that you guys can digest it without getting a tummy ache while you're taking your little nappy-wappy. I have this video timestamped, so go ahead and skip ahead to the deal section if you don't want to hear about who Bill Ackman is, what makes Pershing Square Tontine Holdings special, and the market conditions that brought us this deal. This deal's complicated, but that's not necessarily a bad thing. Inception was a great movie, but it was very complicated. Remember that spinning top at the end? That one still messes with me thinking of it. Too complicated can get really messy though. Think of something like Tenet. Way too much timey-wimey stuff going on there. Nobody really understood it on the first watch through. Thankfully, Pershing Square Tontine Holdings is closer to the Inception side of the spectrum than the Tenet side of the spectrum, and it's pretty easy to understand once you break it down. Before we get started, I want to talk a little about Bill Ackman. Part of the appeal of this deal involves having a certain amount of faith in Bill Ackman that he can get shit done. It's really important for us to understand who he is. Now, after that, I'll talk about what makes Pershing Square Tontine Holdings structure unique, and then we'll get into the deal with Universal Music Group. So, who exactly is Bill SPACman? He's a deep value investor who looks up to Warren Buffett. His fund, Pershing Square Holdings, actually outperformed the S&P 500 by 50% in 2020. And this was primarily due to a single bet. Ackman was paying attention when COVID was spreading from China at the end of 2019. He knew some serious shit was about to go down, and so he paid a $27 million premium to buy protection on global high-yield investment-grade indices. That's right. The dude effectively bought insurance. Now, I know it's easy to hate on hedge funds, but if you really think about this, you could get a pretty solid justice boner thinking about how this is one of those few cases in history where an insurance company actually has to pay out fair value for a black swan event. I wonder if the underwriters on that policy got fired. Either way, Bill Ackman made out like a bandit. He turned a $27 million bet into $2.6 billion by March 2020. Now, depending on the metric you use, this is going to go down as either the greatest or one of the greatest investments of all time. It's important to remember Bill Ackman is not perfect either. He lost a ton of money trying to short Herbalife on principle alone. Bill thought that it was a multi-level marketing scheme, and he's a bit of an activist investor, so he was shorting it. His short didn't work. But Bill's right, Herbalife is an MLM, and you should probably unfriend your hometown friend Karen on Facebook before she tries to sell you some more of her miracle weight loss supplement. Even when Bill loses, he wins. Bill isn't a one-hit wonder either. His fund, Pershing Square Holdings, since 2004, has consistently had higher net returns than the S&P 500 and straight up outperforms the index on most years. What I think is most impressive is he doesn't use the spray and pray method either. Get a bunch of stocks, hope one of them hits, and then call that your gain for the year. As of the most recent 2020 year-end investor presentation, 96% of the fund is made up of just a handful of positions, the largest of course being index CDs. After the bet, that makes sense. Second largest position is Pershing Square Tontine Holdings. So his fund's second largest position is the SPAC that we're talking about. After that, in order, we have Lowe's, Chipotle, Starbucks, Agilent Technologies, Restaurant Brands International, Hilton Worldwide, Berkshire Hathaway, Fannie Mae, Freddie Mac. That's it. There's nothing speculative in that portfolio, just solid, deep value when he purchased it and good performance and good returns since then. Besides, it's Chipotle and Starbucks. Who doesn't love burritos, guac, and pumpkin spice latte? I wouldn't bet against those companies, and neither's Bill Ackman. Also worth noting, Bill Ackman's idol, Warren Buffett, is 90 years old. And everything we know about human lifespans indicates to me the mantle for the greatest value investor of all time is soon going to be up for grabs. Bill, on the other hand, is a 55-year-old, 6'5" tall, svelte, silver-haired fox, and he's more than ready to surpass his idol. Let's talk about what made Pershing Square Tontine Holdings a unique SPAC from the beginning. Now, this is one that people have been genuinely excited about since its inception, and for starters, the first thing most people notice is that the NAV is $20 on PSTH. Now, before somebody calls me out on this, I know the NAV is technically slightly higher than 20 because of the Tontine Warrants, but for the sake of simplicity, just let me have this one. Most SPACs, as you know, have a NAV of 10, but Pershing Square Tontine Holdings doubled that. With SPACs, if you don't like the merger target company, you can redeem your shares at least the minimum value of NAV. This higher NAV of Pershing Square Tontine Holdings immediately gave investors of the SPAC the impression that they were big game hunting, going after a big company. Ackman himself confirmed this, and from the beginning he said they were searching for a mature company, a value buying opportunity. There are some other points of the PSTH structure that are wholly unique, and to understand this, it's best to imagine you're a company that a SPAC is going to be merging with. Imagine the SPAC team tells you they have $1 billion in their trust for the merger. But that $1 billion isn't absolutely assured, and it's pending any redemptions. Now, a redemption is when somebody who's invested in a SPAC doesn't like the target, and effectively they get their money back. If the public holders of that SPAC don't like the merger target, there's nothing stopping them from simply redeeming their shares, getting their money back, taking that money out of the trust, and walking away. This leaves the SPAC trust and the target company with less money, and how do you think this would make you feel as the target company? Probably like shit, because you're getting less money than you signed up for with the original SPAC merger agreement. This has been a problem with SPACs since the beginning. Pershing Square Tontine Holdings addressed this issue in a couple of ways. First off, Bill's fund, Pershing Square, committed $1 billion to the trust, and this effectively set $1 billion for the merger as the floor. We saw this when we looked at their year-end holdings earlier in the video, that they had a huge position established in this trust already. Also, most SPACs have promote shares. Pershing Square Tontine Holdings has these as well, but they're structured a little differently. Promote shares are a mechanism for the directors and the board and the initial investors to pay themselves after the merger. The way that PSTH has their promote shares structured, though, unless the share price hits $24 a share after the merger, Pershing Square, Bill Ackman, the other directors are getting jack squat. So they're actually incentivized to put forth a good deal. Otherwise, unless it hits that price in the next 10 years, they're getting nothing. The final way, and probably the most complicated way, that PSTH incentivized investors not to redeem their shares and to commit to the process of the merger and stay with the SPAC are the Tontine Warrants. A tontine is a financial structure dating back to the 1600s. With a tontine, you would have a group of investors pool their money together to invest in some big thing. And this gave them more buying power since they were pooling their assets. Now, the way this worked is as those investors died off, this investment pool went to the survivors, giving people a larger piece of the pie over time. Don't quote me on this, but I'm pretty sure the Tontine structure died off because people were absolutely murderizing each other in pistol duels and poisoned beer. Even if that's not the truth, that's what I'm keeping historically accurate in my headcanon, so don't spoil this for me. When you purchase one share of PSTH, you're getting 1/9 of a Tontine warrant. After the deal is announced, if you hold your share through the deal, you get an additional 2/9 of a Tontine warrant, which brings you up to a total of 1/3 of a Tontine warrant. I know. Adding fractions, it's tough. I'm sorry about that. The kicker here is the survivorship of not redeeming your shares after the merger's announced. For the people who do redeem their shares, they walk away with their original share plus a 1/9 Tontine warrant. For everybody else who stays with the deal, they get all of the Tontine warrants that are redeemed on top of the ones they already had, so they're getting a bigger piece of the pie. This creates loyalty in the SPAC. By the way, this is why people recommend buying shares of PSTH in multiples of 9, so that the Tontine warrants are very, very neat to figure out, very easy to figure out. Usually when you buy shares of a company, if you're an options trader like me, you buy shares in lots of 100. But with PSTH, I'm actually buying shares in lots of 108. I could trade options on the 100, and then I still have the nice multiple of 9 for the Tontine warrants. But also right now, until we get to the deal, I would not recommend trading any options on PSTH. Again, just not financial advice, but probably a bad idea. All in all, these unique aspects of PSTH made it so that merger or deal targets were incentivized to get into bed with sexy silver fox Bill Ackman because there would be a guaranteed higher floor for the business combination and fewer redemptions. Something completely unexpected, though, that ended up delaying the SPAC from finding a target. The United States started printing money in an effort to outcompete Venezuela for the highest quality, softest toilet paper currency in the world. This made debt incredibly cheap, and companies that needed money could just take out a loan, borrow it. And nobody wanted to give up partial ownership of their company to Bill Ackman because debt was so cheap. PSTH filed its initial prospectus on July 21st, 2020. SPACs have a 2-year shelf life. If there's no merger made or no deal made within those 2 years, the SPAC actually dissolves, the money goes back to the investors, and this would have been a huge hit to Bill Ackman's reputation. Originally, there were rumors that PSTH was going to take Airbnb public, but the Airbnb execs realized, intelligently I might add, that they could just go public through a normal IPO process, and with all of the money being printed, traditional investment vehicles were just being dumpstered by the low rates. I mean, come on, a 0.01% return on a savings account, a 0.1% return on a 24-month CD. Please. So people were just throwing all this funny money at equities in the stonk market. Airbnb took advantage of this investing mayhem, went public through a traditional IPO, retained its own ownership, and honestly, they've done pretty well for themselves without the SPAC merger. TikTok, summer 2021 came around, and Ackman had yet to strike a deal. Enter Universal Music Group, the largest music pure play in the world, with an incalculable TAM, with streaming services, music, concerts, merchandise, and a stable of artists that's so large, it's almost confusing. We're talking the Beatles, Queen, the Rolling Stones, Taylor Swift, Post Malone, The Weeknd. All of them are signed up under UMG. And you want to talk about moat? Music is really a 3-horse race. You've got UMG, you've got Warner Music Group, you've got Sony, and then everything else in the world is basically lumped together under indie labels. All of those indie labels put together still had a lower revenue than UMG in 2020. Music is art, and art is an idea. Labels own those ideas, not the artists, and the labels get paid royalties in perpetuity. UMG gets paid every single time one of their songs is played on Spotify. UMG gets paid every single time one of their songs is used in a low-effort TikTok. Seriously, TikTok is like budget YouTube. It's worse than Vine was. We're talking lowest common denominator. Anyways, UMG has over 100 years of royalties coming in from their catalog of music music. On top of that, one of the more prominent UMG artists, The Weeknd, just had an NFT auction for some of his unpublished work, and he ended up making millions. If the company follows through with the NFT concept, which isn't really a stretch considering the intellectual property licensing that they already do, the revenue possibilities are even more ludicrous. Cash printing machine. 2020 was a bad year for music though. No concerts, few new albums, and generally less merchandise consumption. Thanks, COVID. UMG's majority owners, France's Vivendi and China's Tencent, wanted to take the company public. I'm assuming this is mostly Vivendi's decision because of their insurmountable amount of debt, but they were also facing a major tax hit if they did take the company public with the shares that they had. Nobody likes paying taxes, and y'all know damn well every corporation is going to do every single thing they know how to do to avoid paying their fair share of taxes. This is the part where Bill Ackman enters the picture heroically with Pershing Square Tontine Holdings. In 2019, JP Morgan valued UMG at about $50 billion. That same JP Morgan researcher, Daniel Kervin, teased a blue sky valuation of UMG just this year of $120 billion. In 2020, Goldman Sachs valued UMG at $36 million. Just at the end of April, Goldman Sachs analyst Lisa Yang valued the company at $53 billion. Bill Ackman's brass cojones negotiated a deal with Vivendi that valued UMG at $41 billion. PSTH would be taking over 10% of Vivendi's shares, Vivendi's stake in UMG. It's really important to realize at this point, this isn't a SPAC merger, this is a business combination. Also, if we just completely ignore JP Morgan's $120 billion blue sky valuation, and instead focus on Goldman's more practical $53 billion valuation, that's still 30% higher than the valuation Ackman struck this deal for. Remember that number, 30% discount. We're going to come back to that later. PSTH is buying a 10% stake in UMG for an EBITDA multiple of about 21, when fair value for the company would be somewhere in the range of a multiple of 25 to 28. Warren Buffett Jr. right here. This is more value than a blue light special at a failing Kmart in the 1990s. What does this all mean for PSTH shareholders? What are we getting out of this? In the abridged and totally miscontextualized words of Thanos, everything. Here, let me move to the side to make room for this sweet graphic I made. Following the transaction, a PSTH shareholder is going to have access to 3 separately traded securities. A UMG ordinary share valued at approximately $14.75 a share of PTSH Remainco valued at about $5.25 a share, and 1 transferable 5-year right of a SPAR. So, what are these things? The easiest one to understand is the UMG share at $14.75. This is the closest thing to normal for a standard SPAC, kind of like the 1-to-1 exchange we talked about earlier. But wait, I thought NAV was 20. This is only $14.75. What kind of lopsided crap is that? We're paying $20 to get $14.75 back? Well, yeah, but no, not at all. That $14.75 is the pre-IPO price. Historically, what do we know about pre-IPO prices? These are the lower prices that institutions buy in at before a stock is traded publicly, and retail investors get screwed on IPO day as the price just skyrockets. If you missed it, that's right. PSTH shareholders are getting in on institution day. Look at me. I am the institution now. Also, keep in mind that valuation. We're getting at least a 30% discount on UMG. So there's already inherent value here, but in the immortal words of Billy Mays, but wait, there's more. Pershing Square Holdings is buying a total of $1.6 billion of PSTH. Now, I'm not sure if they already have it or they're buying more, but that is the total amount that they're contributing. PSTH has about $4 billion in trust, so that brings the total to $5.6 billion. That 10% of UMG is going to cost us $4.1 billion, so there's a remainder. There's a remainder of $1.5 billion. That's Remainco. Terrible name, simple purpose. This is going to continue to be traded under the ticker PSTH, and it represents the remainder of the funds in the trust. It's going to function like a little mini SPAC with no expiration, no 2-year expiration, and Bill Ackman can use this to merge with another company or use this to strike a deal with another company. And to be clear, a trust of $1.5 billion still makes this one of the largest SPACs on the market. And this is just the scraps of this deal. We're not done yet. If you choose not to redeem your shares, and let's be realistic, I don't know why anybody would redeem their shares at this point. If you're following along, we've got fair value on day one of UMG plus 525 for Remainco, and that doesn't count any discount we'll be getting with Remainco on a future deal, so I don't really know who would redeem this. But assuming you choose not to redeem your shares, you're also going to get a 5-year transferable right called a SPAR, which is going to be part of a SPARC, SPARC, and this is effectively a 5-year leap call option under the name Pershing Square SPARC Holdings. A lot of people that I've been seeing online are considering this to be a meaningless throw-in to the deal, but this could well be the most important and valuable part of the deal. Think of a typical SPAC. On most SPACs, you're buying in on faith and you don't know what you're going to be investing in. You're hoping the team gets a good target, but if they don't and you choose to redeem your shares, then you've just lost opportunity cost for however long it took to make that merger happen. Think how many SPACs trade at or near NAV with no appreciation. Nearly all of them. SPARC is going to give you the Nostradamus-like power of precognition. What if this SPARC lands partial ownership in a mammoth company like Bloomberg, Stripe, Subway Restaurants, or Lego? Suddenly, you're Doctor Strange and you could use the time stone to decide if you want to join this deal at a NAV of $20 after the definitive agreement is signed. This is literally precognition, arguably the strongest superpower, and you've got it with PSTH. If you don't like the deal, you can simply walk away and you have no obligation to exercise that SPARC option. Also, similar to the Tontine Holdings warrants, SPAR holders who decide to exercise their shares after the definitive agreement is signed are going to be getting a proportionally higher share of the SPAR options. So as SPAR holders drop out, the survivors again are going to get a bigger piece of the pie. It really incentivizes sticking into this deal as long as you can. Oh yeah, I forgot about those Tontine warrants. What happens with those? So these warrants are not going to be exchangeable one-to-one for UMG shares. Instead, they're going to be redeemable at the 1/9 or 1/3 value as explained earlier in the video, depending on redemption or not, but not for UMG directly, and instead it's going to be for PSTH. The value is going to be determined by taking the volume-weighted average of the PSTH Class A common shares for the 10 trading days leading up to the deal. Again, this indicates it's going to be clearly better to not redeem your PSTH shares because this is going to give you additional access to more PSTH shares, which indirectly means more UMG shares, more Remainco shares, and more SPARC shares. It's impossible to calculate the real value here, but you're looking at $14.75 for the UMG pre-IPO price plus 30% to fair valuation. You're looking at $5.25 for the Remainco share price plus any discount that Bill Ackman's able to negotiate on a future deal there. You're also looking at the appreciation above the NAV for the SPARC after whatever miraculous deal Billy Boy's able to work out there. I'm no genius, but I know that's going to be way over $30 per share of PSTH. As of the recording of this video, on the close of trading June 11th, PSTH was trading for $22.96. This is quite literally and quite simply free money in the bank as long as you're willing to be patient. So what are the risks? There's always risks. Well, for one, the deal could fall through. Nothing is signed. And if the deal falls through, our silver-haired king of value is going to be scrambling to find another merger or another deal within the next 12 months before PSTH has to dissolve. At that point, if it does dissolve, then all we're going to get back is NAV. Also, there's the risk of the SEC getting off its collective ass and actually regulating something for once. Nothing like this has ever been attempted, and we don't really know if the SEC is going to give it the green light, mostly because there's a lot of international players here and a lot of moving parts. This is going to be very complex for approval to be granted. On top of all that, UMG is not going to be traded on an American exchange. Remainco and the SPAC are going to be traded on a US exchange, but UMG is getting listed on the Euronext Amsterdam exchange. Seeing as the majority of the PSTH shareholders are retail, this is going to be a nightmare for retail brokerages to figure out how to trade this. I love Webull. You guys know I'm partnered with them on this channel. They support me a lot on YouTube, but the reality is they're a younger brokerage with less financial leverage, and I'm probably going to be sending my PSTH shares to my Fidelity account to let the big boys handle this one. In closing, I'm not a financial professional. I've never told you guys to buy anything, but come on, you can see these numbers as clearly as I can. When you buy a share of Pershing Square Tontine Holdings, you're effectively giving yourself 1 share of a mature, industry-leading company and 2 shares of 2 other additional mature companies in the future. PSTH becomes its own diversified index fund in a sense. You're getting in at the ground floor on 3 companies public trading, and we all know that diversification is a safe strategy for investors, and getting in early on IPO is much better than getting in late. This is a AAA level opportunity with a low risk, high reward profile. People were scared of the complexity of the deal and annoyed that Bill didn't land some tech unicorn, but he did exactly what he said he was going to do. Bill landed UMG, a mature company at value. Ackman is the next Warren Buffett. Changed my view. All right, everybody, as always, thank you for checking out the video. If you're new to investing and you want to support the channel, check out my Webull referral link below the video. If you sign up for an account, deposit $100, you get a free stock, I get a free stock, everybody wins. Also, if you enjoyed the video today, please like the video, subscribe to the channel, and if you want to be alerted to all my content as soon as it goes live, make sure you hit that notification bell. All right, everybody, thanks a lot. Stay safe. Have a good week.